11 5 because the most of the were in the tea break. So
Speaker is a serial entrepreneur with 2 decades of experience building multiple ventures across continents. He has also helped startups launch their successful ICOs and runs a mining solution in the US. His talk is titled Understanding Investment ICOs and Mining. Please welcome Gaurav Dubey.
So, just to understand my audience a bit, I was wondering how many of you have already invested in one form or the other in ICOs? Any one of you? Okay, just quite a few. Fine. And who are daily traders by any chance? Good. So, anyways, this talk is more centered towards understanding how in a long-term vision, in a long-term as a long-term goal for your investments, how should we plan in investing in projects? I wouldn't say ICOs, I would say projects, because a lot of ICOs these days are not even quite some projects. And the bigger and better part would be understanding mining, because every second person in the industry who understands computer hardware, or even if they don't, they get into buying computer hardware in one way or the other and getting into mining. So we'll begin with the first, the only 4 propositions, the real 4 propositions that I can come across on as to how can you begin investing in blockchain industry in general, or distributed ledger technology. So you can either mine, do ICOs or invest in ICOs, get into daily trading, or you can also get into development, think of a project, come up with a problem, solution to a problem, and get going with the developments. So some basic stats of how crowdfunding has evolved into ICOs and the kind of numbers these ICOs are doing these days. So more than 250 ICOs have closed more than $2 billion in ICOs since January 2016. So although there's a lot of discussion going on around the world about how are they planning to take ICOs with all the utility tokens and securities and stuff like that. So without getting into the nitty-gritties, I would still frame the statement as token are simple crowdfunding units. You can use them as securities, you can use them as utilities, you can simply use them as shares or whatsoever you want, and it's a fundraising exercise in general. In the life cycle of an ICO these days, we don't have a lot of successful projects, so people are not able to grade their investments in as to how they're doing, or either they panic with the market, or they lose trust to the project when the developers are engaged in main course developments. So we need to understand the overall journey of an ICO from its development to the kind of place where the project is destined to reach. So this is what happens. This is the kind of graphs you see. I have not included the daily pumps and dumps. I've also not included the whales in this, because that's the most unpredictable part of it. We are simply taking it as in terms of project lifecycle development or the ICO lifecycle. So a person launches an ICO, distributes tokens. Once the token is closed, the PR still remains, because the backlinks are still working. Your banners might have not exhausted. There's a lot of traffic flowing in. Latecomers kind of get into a fear of loss with the opportunity loss that they seem to have faced with the release of all the tokens. So they get onto the exchanges, they buy it high. Although this is kind of a dying trend, but yes, it does happens with good projects. So we're not including the project that failed to do good PR and marketing. So yeah, the PR is done. All the news emails are kind of read later on, people bump upon these news here and there, and that is what I call PR drag. Apart from that, all the hype that was created these days, people are like kind of in a jiffy to raise ICO. So I need to do ICO like as in yesterday. So in that case, they spend a lot, and a lot of hype is created that also gives you a drag even after the ICO is closed. So the first raise that you see in the graph that keeps on rising even after the token launch is mostly because of that drag and PR hype. What happens is this makes the developers and the community and the project owners or developers in general a bit comfortable, and they get into development. They don't want to carry on with their connect with their community, and that is when the graph starts to fall. And this is what we have called a disconnect. So in this disconnect, there's not a lot of news. In fact, what would you tell them? You can't give them every line of code that you push every day to your repository, and that is when people lose interest. Especially investors, they think that, and yes, of course, the news these days, you've been listening, shit coin, no coin, what not coin. So investors get into thinking that the project that they've invested into is also one of a kind, and that is when the first investors kind of start to dump. They want to get out of the token because the value is already appreciated. These stock buyers, they're mostly stock hoppers because they have a new ICO coming up, they have a fresh project in mind, they understand the value of change, especially in an evolving industry where the upcoming technologies are way beyond the last technologies or the projects that were thought of. So a typical example can be LTC, can be Dogecoin. I personally love the example in terms of category. You look into Poloniex as an exchange that had all the tokens that were being developed in 2016, 2015, and maybe earlier. Not 2016 specifically, 2015 and earlier. So you have a particular grade of tokens that's mentioned there, and that was the time when Poloniex was doing like close to 5 million a day of volume. Then came Bittrex, and you can see tokens from, mostly new tokens from 2016 onwards in Bittrex, and so did the volume shift to Bittrex because new technologies were more promising, they were more advanced, and the investor wanted to hop onto these technologies now. So these are the people whom I call stock hoppers. With this dump, again a drag follows. There are a lot of traders who follow the charts, of course. The most prominent thing about trading is the charts that you see. So as soon as the image starts to get red, a lot of people, a lot of investors, they start to dump their investments. They kind of begin the panic in the long run. So this investors dump is again followed up by a lot of holders dump. Now what you are left over, what the stock is left over with, although entrepreneurs have nothing to do with it, they are still happy with the money that they have raised in the ICO. But yeah, I'm talking about a person who has started into investments into ICO. So then is the time when the real believers of the project, mostly industry enthusiasts. So let's say if the project is about banking, so people who understand banking, people who understand the way money moves around the world and stuff like that, they would possibly be the people who would still hold on to their stocks. Some developers with minor stocks, and the biggest investors, the raise that you get in this time are the daily buyers who kind of tend to buy dead stock. So there's a whole breed of traders that gets into trade on these bad days. They get into buy free stocks, like a typical Warren Buffett strategy possibly, and that is when the project again takes off. This is backed up by, in the meantime, this is like maybe in a year and a half or maybe a year, totally depends on the kind of project we're talking about. Maybe in a year the delivery comes, like possibly the POC if not POC, then the research paper. Like I'm specifically talking about Golem. So they raised some gigantic figure in amount, and now after a year, you finally know that the project was real. So now is when they have released their research paper, but the people are so happy with just the research paper that the stock is again rising. So yeah, delivery starts, the project starts to get clients, project starts selling, organic project growth. So this would be the time when you should expect the real returns. It's a typical strategy that our forefathers, our fathers used to teach us. So you buy a stock not for today or tomorrow, you buy a stock for a lifetime. Like possibly even today, our fathers would get deep into their shells and pull up papers and would tell you that they have bought these stocks like 1,000 years ago, and these stocks are worth millions. I've heard of a story, a video of Z Business, wherein a guy sold MRF stocks bought by his father, and at some 15 rupees or whatever, I don't know the launch price, and they were worth around 340 crores. So yeah, this is the kind of return that you expect with a good ICO, with a good project, and yes, of course, in due course of time. You just cannot get into comparing everything with the current bull market and with the current bullish run of Bitcoin. So just to support my statement, just to give a long-term view again, and not following up with what Bitcoin, with the kind of market statement Bitcoin is creating these days, we have a comparative chart which is very basic, based on some stats from ICOstats.com. So Ethereum, right from 2014, is like some number that is close to 223. 100%, 1,000%, which is not even close to Bitcoin. So people who are getting crazy with Bitcoin, people who are stocking Bitcoins and thinking that this is finally the most supposed to be the most valuable currency, should look at these figures and kind of start changing their mind about stocking other stocks, other ICO tokens. We have taken Bitcoin price on Ethereum token launch day. So you can clearly see that it's close to 3,000%, which is not as great. Augur as a project is not even close to delivery, and it's still double of Bitcoin. So I think it would be time when you revise your, if in case you're not already, so to revise your investment strategies about ICOs and quick buying and quick selling. Rather than only trading when the stock is doing great. I mean, that's my personal strategy most of the time. From here we kind of change onto our next topic, which is mining. So I have a quick question again for the audience. How many of you have ever been close to mining? Okay. So that's why I chose ICO as the first topic, because you always have more investors than miners. We are very traditional, but I have a news for traditional and institutional investors again, with the second part of my presentation. So this is the most traditional definition of mining that we have ever heard of. A way to secure the network by creating, verifying, publishing and propagating blocks. So this is what we have been living in. We are into enterprise grade mining. We are consulting a few countries in the European Union for their long-term mining expansion plans. And the angle that we have towards mining is for 5 years, 10 years, and the rest of my talk will be kind of inspired from the thought of a mature mining business. So I'm sorry if it hurts sentiments of daily miners or local miners who are mining from their home, but we'll have to get mature with every business that comes across. So yeah, the new definition that we think of, the mining community thinks of is contribution of computing, non-computing resources to a distributed cloud. So this has to be the eventual future of blockchain. How long will we be like doing Bitcoin and spending like a few $million, a few million kilowatt-hour units of electricity, simply just to make it more pricey, simply to make it more valuable? although my past talks have been around the topic where I was trying to prove how valid this investment is, but now my topic today is about how are we taking our future to be. So for now, comparing the traditional and average banking to Bitcoin transactions, I think it's still worthy. Bitcoin is still worthy when compared to the electricity spent on managing our current global banking infrastructure. But then we can do better than this, I know for sure. So this is the new definition. The old definition was limited to Ethereum, Bitcoin, Dogecoin, Dogecoin, sorry, Litecoin, and stuff like that. These are all simple transaction verification methods. The new one is about projects like EOS, Golem, iExec, Saya. So these are distributed cloud, either, like we should have mentioned Storge, I know, but I don't trust the project because it's not truly decentralized when it comes to code. So yeah, these projects are distributed computing, non-computing resources cloud. Storge gives you a distributed disk around the distributed network. EOS is supposed to give you computing power. Golem is doing something around the same, and